Are back. Welcome to Stock Tricks with Nick. Hope you guys hung in there with a pretty volatile week, especially Thursday and Friday. If you're new to this channel, each week on Friday, 7 p.m. Central Time, we go over some technical analysis of the stocks that I traded in the past week. We go over my watch list and some setups that I'm looking for in the week to follow, and some general trading principles or rules that since I've adopted, I've been trading a lot more consistently, and I think they can help you out. Along with those Friday live videos, I will also be doing either Tuesday or Wednesday personal finance videos. So if trading stocks isn't your thing, but you want to get a little bit more interested or educated on personal finance topics, this is also the channel for you. So we got personal finance Tuesday, Wednesday coming up probably in 2 weeks. And then on Fridays, 7 p.m. Central, always Stock Tricks with Nick live. All right, let me jump over to my other screen here so we can throw on the agenda for the day. So we have market recap, general market recap. We got the August trading results where I'll go through not every single trade, but on a summarized basis, how the results came in, some of the stats that I track, and how I use them to improve my trading month to month. Outside of that, we'll go over the technical analysis, and that's just going through a bunch of different charts. We'll start with any stocks that you have, that you put in the comment section. So I'll be checking that throughout the stream. And once we get to the technical analysis part, we'll start with the stocks that you mentioned that you want to look at first. So make sure to utilize that stock stream or the comment section, sorry. Once we get through some of the stocks that you mentioned, we'll go over some past trades of mine, take a look at some winners, some losers. That's one thing about my channel. I will always share my losers. You probably don't get that at a lot of other stock trading YouTube or TikTok traders, but listen, we're not going to improve as traders if we're not going to be honest and really look at some mistakes that we made. So I will always share the mistakes that I made, because not only is it forcing myself to think about the trade again and really understand where I went wrong, but it also helps you guys out. So if my losses can pay your tuition in the market, better for the both of us. After the past trades I make, we'll go over some of the current trades that I'm in. I'm only in 2 right now because the market's been really shaky. But we'll also go over some stocks that are on my watch list, some that might be setting up for trades in the next week. And then we'll wrap it up with, go back to the comment section. So if you get an idea while I'm going through some of the stuff that I've been trading or my watch list, keep commenting. I'll look at those and get to maybe 3 to 5 other stocks at that point. Once we get done with all the technical analysis, we'll just prepare for next week by going over some general trading rules. That'll come up throughout the video, but go through a couple more of my own trading rules. So this is the 3rd week we've been doing this. So any comments that you have on improving the live stream, what did you like about it? What didn't you like about it? How can I improve this week to week? Please comment that below. Super helpful for me. Probably helpful for you in the future if you do find value in this and want to be coming back. Yeah, so comment and let's get to it. Really quick, you might notice the Hawaiian shirt and the different setup I have. It is a long weekend. We should be getting some time away from the charts. So I'm actually at my friend's house in Michigan, took a little road trip for the day. So after this live stream, try and get away from the charts, relax a little bit. I know it's been a really volatile week. If you were in some of the growth stocks like I was, Wednesday, Thursday, Friday, could have been really rough if you didn't have any stops. So it's best just to push that stuff to the side, take the rest of Friday, Saturday, Sunday to relax. Market's closed on Monday, but come back to your screen on Monday with a clear head and write out a trading plan so you make your plan while the money is sitting frozen, the stocks are sitting frozen, you're not losing or gaining money, and then trying to make a decision based on that. I always make my trades in the morning before the market opens. I adjust after the market closes, And I find that's best for me because then I'm not trading based on my emotion. I'm literally just trading based on the chart. All right, before we get started with any technical analysis, I do have this disclaimer up just to cover myself, but anything that I say here is my own personal opinion. Any of the rules that I say are my rules. They don't have to be your rules. They're not guaranteed to work. Any of the setups that I talk about aren't guaranteed to work. They're just things that I'm looking at. So if you take value from that, that's great. If you can apply it to your trading, that's great. But do your own due diligence. Trading is very volatile, so always start with less money than you think you should be trading with. That was a mistake that I made early on in my trading career. But always do your own due diligence. All right, with that said, let me jump to the live comments. Sorry about that. I'm just gonna pop out the chat so I can read them while I'm looking at the other video. All right, so let's see really quick. Market, you can see that, great. One comment that I got last week was that you guys couldn't see the ticker that I was looking at. So I added this, kind of pixelated up here, but hopefully you guys can see that a little bit better. That's an example of how any comments can be used to improve the stream, and I really appreciate that. So any improvements, comment them below. All right, so let's just look at the general market. If you haven't looked at any of the stocks this week, you might be a little bit surprised here, but the bubble did burst a little bit. So let me zoom into the 3-month and shrink the relative strength down for now. So this is Friday, this is Thursday. We're looking at SPY right now. That's the S&P 500. Wednesday itself was pretty volatile. We had a drop, came back up, and at that point I was taking a lot of my profits on winning trades. I was trying to cut down on any trades that weren't working. But one of the mistakes that I made was getting into positions that were still setting up, still look like good positions, but I should have been reading the market better and getting all my cash to the side. Because once you get a candle here that closes over the Bollinger Band, sorry, I should have changed this. So in the stream, let's see, it's always flipped on me. In the stream over here, you'll see the description for each of the chart lines here. So we have the 200-day simple moving average is yellow, 50-day moving average is red, Bollinger Bands, which is just the 20-day simple moving average in green here, and then 2 standard deviations around it. So it gives the stock basically a channel to be trading in. And then we have volume down here with the 50-day volume average, and we have relative strength, which I added this week because it becomes much more important when there's market pull downs. So looking at the SPY here, we saw this green candle close well above the Bollinger Band, and that is always a signal once that happens and the amount that it closed above that Bollinger Band is really a signal for you to be selling into strength, taking some profits off the table, and not buying any stocks that are going to be overextended already. Because once the indexes start pushing over these boundaries, that's when you know there's likely to be a pullback. Let's see if there's another example if I zoom out. So in this recent rally, it's been pretty wild. Every move up has kept going up, but here you see 2 candles above the Bollinger Band. We got 2 sideways movements, then a huge drop. So it doesn't always work. Technical analysis doesn't always work, but you're just trying to add as much probability on your side when you're taking a trade and just repeat that over and over and over again to make profits. So once I saw that candle on the S&P 500, that's when I started to scale out of my winners. But mistake that I made was I still put on new trades that were setting up really well, just starting to break out. Shouldn't have been doing that. Should have been taking all my money to the side, locking in great profit. So that was the S&P 500. Looking at the NASDAQ, because that was hit the hardest. It was the tech stocks that were building this bubble up, as some of the stocks that we'll go over later were way, way overvalued. got way bought up, and we saw this red candle close. A red candle close over the Bollinger Band is even worse than a green candle. Green candle on an individual stock over the Bollinger Band, if the Bollinger Band started tight already, that could be a breakout indicator. So I'm not worried if the candle's green and it's closing over, if it's an individual stock, but this red one is usually, actually scratch that, always I'll take some portion of profit off if I see a red candle close over the Bollinger Band, over the upper Bollinger Band. Red candle close, just if you're new, is where the stock's closing price is lower than the opening price. So green opens lower, closes higher. Red, open higher, close lower. So yeah, you got this breakdown. Got bought back up on Wednesday. So everyone's like, stocks only go up, market only goes up. Who cares? Wasn't the same on Thursday where it opened, it opened down and just kept selling off. Broke under this 8-day exponential moving average. Got bought up a little bit as it kind of faded towards the 20-day simple moving average. And then in the morning, this is something that I warned people about this morning, Friday morning, on my Twitter and StockTwits accounts. I said, hey, be careful. There's going to be, usually there's a 1 hour or so rally in the market where everyone just tries to get in to get that bounce. And after the first hour, if the lows are broken during that first hour, get out, because that pullback's going to continue. And that's exactly what we saw. We saw a lot of traders boasting about like, oh, stocks are going back up. Stocks are going back up. I'm so glad I bought the dip right at the during yesterday or right in pre-market. And it ran back up for like 30 minutes, instantly pivoted, went back down, broke through the lows, broke through the 20-day simple moving average. NASDAQ went way down here, popped back up. Figured there was going to be a buy, kind of like a market rally going into the long weekend. Again, Monday's off. So going into the long weekend, figured there'd be some buyers come in, prop that up, but still closed under the 20-day simple moving average. So do I think we're out of the woods? Probably not. I only put on 2 positions today, only have 10% of my account working for me in positions. So I put everything else to cash. I got stopped out of a lot of positions, and I'll let the individual stocks kind of set up and go from there, but still trying to keep my exposure low at this point. All right, hey. All right, yeah, keep commenting any stocks that you want me to talk about. I'll get to that once I get to the more technical analysis, not just the market recap, but I appreciate the comments. All right, with that overall market done, I want to kind of go through what I do to keep a trading journal. So keeping a trading journal is something that I started in June this year and have found it very, very helpful. Ever since I started reading Mark Minervini's books and following him on Twitter, please give him a follow. He called this market pullback 3 days before it happened, where he started shorting, he started going into cash, taking positions. So he is a great follow on Twitter. His books completely changed my trading. And one of the things that I took away from that was always keep a trading journal. So because I'm always transparent about my wins, my losses, my mistakes, again, always sharing my mistakes, here's my recap for August versus since June 1st, just when I started keeping these metrics. So we have total profit and loss. So you can see a lot of my profit so far since I've been journaling this has come from August. August was a great month. Obviously, all the indexes rose into that lockout rally that we saw. So it should have been a good month. One thing that I did better compared to, and now thinking about this, I should have made this X August, like June through July, but I guess this includes August data too. But one thing that I really improved on was my win rate. So in August, my win rate was a little bit over 50%, 52%, compared to what would have been under 40%. And you might see that and say, wow, you're winning less than 50%, you're gonna be a loser overall. And that's not true. If you can keep this ratio of your average win dollars to average loss dollar above 1. So what does that mean? When you take a winning trade off the table, once you lock in those profits, what is your average win? So that's a very important thing to keep track of. So for me in August, my average win was $112.66. My average loss was $62.66. You always want to keep your winners as large as you can while cutting your losers as quickly as you can. So that 112 divided by 62, that gives me a 1.8 win-loss ratio. And ideally that's as high as possible, but my target is always to keep that around 2 and keep my win rate around 50%. Those are both reasonable targets to have, and if you do that, you can just turn over your portfolio over and over again and really maximize your profit there. But as you can see, I really wanted to focus on improving my win rate because it had been so low before this month. So I was cutting winning trades a little bit quicker, making sure there were wins in the book, and keeping losing trades pretty steady, always getting out as quickly as I could once I knew that the trade was going to go against me. So 1.8 average you could see compared to the rest of my time trading, and these are just for going long positions. We'll get to the short positions in the next tab. But overall, since June, I've been at a 2.43, which is phenomenal, and it lets my win rate be lower than 50% and still allows me to make a profit. So again, ideally, win rate is 50% or above, and the win-loss ratio is as high as possible, but 2.43 is really solid. My average win on a trade is 5.3%, and then jump down here, my weighted average win is 5.78. So what that means is because this 5.78 is higher than the 5.3, that means I'm winning. My win is higher when I have more money on the table, which is exactly what you want. When more money's on the table, you better be winning even more. So that's what, since 5.3 is lower than 5.78, that's good. And then the opposite is true. You want your weighted average loss to be as low as possible compared to your average loss. So for August, those were about the same, 3.13, 3.15, that's fine. Overall though, you can see 3.91 compared to 3.46. That means when I lose, I'm losing on smaller positions, which is good. That's what you want. When I'm winning, 7.3 compared to 7.7 for the weighted average, that's great. Winning more when more money's on the table. So if you have any questions about the metrics, leave those in the comment. I'll get to that before the technical analysis piece. Let's jump to the shorts. So in this market rally, I only take trades that are going in the trend. Always follow the trend. Again, trading is just a game of probabilities. I want to put as many probabilities on my side before I risk any capital. Because most stocks have been going up in August, there weren't many short positions to take. But sometimes I do take short positions to kind of balance my portfolio. If it's getting too much capital at risk on the long side, I will take some short positions to hedge those positions, hedge the long trades that I had. So not trying to make like a ton of money on shorts, but just to give myself more balance. 47% win rate, that's higher than the rest of the time trading. This 1.28 win-loss rate, that's not great. Overall, I've had the 1.94. That's more ideal, right around that 2 range. But got to get the win rate up on that. But in a lockout rally that we've been seeing, that's not surprising that these were so low. Still overall profitable, both P&Ls, so that's good. And then same thing, weighted average loss, 3.6 versus 3.8 for the straight average. That's good. Losing less when more money's on the table there. And the average win, good, 3.06 over the 2.65. I win more when there's more money on the table. And then just overall, you can see the win-loss rate was 1.69 this month, which it's above 1. That's a standard that you need to hit to keep profitable. But ideally, I pushed that up to 2. But I did have a over 50% win rate for the month, which that was really a metric that I was working on. I want to teach myself to take some profit a little bit earlier, make sure I don't let winning trades become losing trades once they go over a multiple of my average win. So that's one of my rules, is to always take 10% profit once a stock goes through a multiple of my average win. So average win since I started keeping this metric, 6.41. So once a position's up 6.4%, I'll take 10% off. Already booked that as profit. Maybe start moving my stop loss up to make sure it's a winning trade. Overall, 2.32 win-loss ratio. That's good. Win rate 40%. Not great. Need to improve on that. All right, let me jump to the comments really quick to see if there's anything here. Thanks, Lucas. Yeah, I added the sub ticker over there. It is interactive, so if you click subscribe, it should go up. Not sure if that's true, but still getting the hang of all of this technical wise. So that is the summarized metrics of the trading for the past month and since June. So that's something that I really didn't see the benefit of my first 5 years trading, because I never really kept a journal for 3 months at a time, then I stopped, 3 months at a time, then I stopped. But I'm forcing myself to keep a diligent journal, keep summarized stats, and really force myself to notice some of the flaws that I'm seeing. Because if I'm not looking at my mistakes and really like having to write them down again, if I can just sell a stock that's a loser and then never look at it again, I don't feel that pain enough to not make that same mistake. I'm trying to feel as much pain with dumb trades that I can, because then I will be less likely to make that same mistake again. So always track your trades. Huge help so far. We'll skip through this. I just took some notes. I do this every month. I haven't gone through August completely. Just got those summarized metrics for you, so I can do that. I might do that on Monday, but I show here. Here's an example of what a typical like journal entry would be. I take a screenshot of the candle chart, so the volume below, and all the red flags show when I sell, the green flags show when I buy. So this just gives me a visual to look off, and then I write the description. I write my average price in, average price out, P&L, and on a dollar and percent basis, and then a description. And I really noticed when I went through each of my trades, writing some of the same descriptions, like bad entry, bad entry, bad entry, you're buying when it's too extended, then you're noticing a pattern of your trades, and you're telling yourself, Nick, that was dumb. Why are you always doing this? And you might not catch that trend right away, especially if you're not journaling. But at the end of the month, when you're forced to sit down and go, all right, let's go over all the trades. Okay, that was dumb, Nick. That was dumb, Nick. Like, why are you still doing this? Don't do it next month. So that was one thing that I noticed early on. I think in June when I did this, the first month, was I was getting poor entries. I was buying the stocks when it was already extended after a breakout. And when you get a bad entry price, then you have to put your stop losses to get you out of the trade that much higher, and that just increases the probability of a losing trade. So that win-loss ratio in June was terrible. It was so low. So that was something that I noticed. So I was like, all right, Nick, you have to be more patient. If you miss a breakout, you miss the trade. Look at this market. There's going to be plenty of opportunities for good, sensible entries on trades. Stick to that. If you miss it, maybe it comes back. You can get it when it comes back and starts moving back up. But if it's already gone, the trade's gone. And that was really, really important on some of these trades that we'll talk about later on. But just wanted to show you a typical journal entry on a trade that I had. But yeah, I did this through all the trades that I made in July here, and some of the blue ones are the active trades that I held through August. Still wanted to throw a description on there just so I knew kind of going into August how I felt. And always put your emotions about the trade on there too. So you can kind of sense like, oh, do I think this is a winner when I'm entering, or am I already shaky just starting a position? Noting your emotions is going to help you when you actually put on trades, because outside of the technical analysis, there's the whole emotional side of trading too. That's if you're not looking at and trying to improve, that's something that's going to be working against you. So with that said, let me jump back to oh shoot. All right, let me jump to the agenda really quick. And yeah, let's go stocks from the comment section. And I'll put that back up. All right, so we got Tesla, Fiverr, and all right, Brent, really quickly, let's see, is this focused on the right thing? Yeah, okay. So Bollinger Band setting, really quick. I do the 20-day simple moving average as the center and just 2 standard deviations on that. I think you can see settings here, yep. And I use the close of the day. I think that's pretty standard. I found that to be helpful. I know some people use exponential moving average versus simple. Again, technical analysis isn't 100%, so whatever you find works for you better. That's gonna take some practice, but I just keep mine simple moving average, 20-day simple moving average based on the close. The only exponential moving average I have on my chart is the 8-day, this purple line. And that's just because for shorter term trades, that seems to either provide support or resistance a little bit better than the simple moving average. All right, so, and for candle charts, I always look at the daily. I might look at so each candle is 1 day. I'll look at the hourly once I start getting into a trade if I want to get it at the right price, but typically I set my trades in the morning, don't even think about it during the day. So what's a good example? Really quick, Stitch Fix. So this is a trade I took today. So I drew this line last night and I said, if it breaks over this line at whatever the price, $25.90 I think it was, go ahead and initiate a position. And you can set all those trades on E-Trade before the trading day starts. So I always do that, so I'm not emotionally attaching myself to the decision. I'm not putting my ego on the line saying like, oh, should I get in now? No, it's already been set. If it hits, it hits. We take the trade. If it doesn't, we don't take the trade. All right, so now let's jump into some stocks. Tesla. This has been a wild one lately. So this is the 6-month chart. Obviously has been doing great. Announced that stock split right here. And actually, let me throw on my, can I do that here? Events, trade history. Events, trade history. Oh, there it is. Okay. So had that 5-for-1 split, where they cut one stock 5 ways. It didn't change the valuation, but because it made it cheaper for people to buy in, psychologically, they're like, oh, it's on sale, it's cheaper, let's buy more. But because of that, it jumped, let's see here, 82%. A little bit extended, right? So I was short Tesla while it was in this pattern because this candle, it broke down, so I thought it was going to be really breaking down to fill some of these gaps in the chart. And I closed my position, half my position, the day before it pivoted up. And then in after hours, Elon announced that it was going to be a 5-to-1 split. Covered my position and bought a share the next day. Rode that up until I got that red candle outside the Bollinger Band. That's it for me. I'm taking my position off. Usually there's a pullback. There was a little pullback the next day, but then this kept running. But that's fine. I made profit. I'm fine with locking in profit. That's never a bad feeling for me. But yeah, obviously this ran way up. And on Wednesday, right? Friday, Thursday, Wednesday, Tuesday, opened higher, started pulling back a little bit. and I didn't have any position at this point. Pulled back. I was really looking at the 8-day exponential moving average to see if that would break. On Wednesday, the stock did go under, and because Tesla's been such a leader in all the growth stocks, I was watching it for the entire market pullback, because once Tesla started going, I figured there would be a larger pullback. So let's see, the first question, should I get out of my Tesla? 297. So 297. Oh, so you got it in the base. So at that point, let me just, from a technical standpoint, Tesla's down a lot after hours. That's because it was announced that they're not going to be entered into the S&P 500 this time around. I know a lot of Tesla investors really were looking forward to that. That was something that they were boasting that it was guaranteed, it was good to go. Fortunately, that didn't happen. Why is that important? Because a lot of retirement money and 401ks go into the S&P 500. So if your stock is in the S&P 500, that's just more retirement money that every 2 weeks is getting pushed to your stock. Your stock's going to be going up. So unfortunately, that didn't happen for Tesla. It was already on a downtrend. Let's see, from the top here, it had dropped to the low today. It's down 26% off its highs. Did rally back up, closed above the 20-day simple moving average, but twice here you could see the tops of the days failing to break over that 8-day exponential moving average. So that's the resistance point now. Once you break under what was support, it now serves as resistance, and vice versa. Once you break above resistance and close, the close is important. Once you close above resistance, it becomes support on the way back. So now it's in this middle part, but let's see, 391. No surprise there. It's right at the 20-day simple moving average. So what I would have done was had a stop at this 8-day exponential moving average, at least for a part of your position. Because if you're riding a really hot stock that's overextended from the base, so this base of kind of flat to medium volatility trading, and you're already up 70% from that base, that's way too overextended to get into a position. That goes back to what I was saying with what I noticed with personal trading. I was buying when stocks were already extended from their base. It doesn't make good probability trades. You're not going to be able to do that over and over again. You might hit on a couple stocks that keep taking off, but again, trading is just about having a strategy and doing it over and over and over again. And that's not a winning strategy to buy when a stock's already overextended. So on Tuesday, because Monday's closed, I would watch that 20-day simple moving average. If it's clearly breaking under that, if it breaks under the low of Friday, then I would just get out, take your profits. We'll see some support at the 50-day simple moving average, because that's also around some of these tops here. So if you're an investor, this is way different. You know the company's fundamentals. I don't have any idea what the company's fundamentals are. I'm looking just at technical analysis. So if you're an investor, much different. Do your own due diligence and understand the fundamentals of a company. Technical analysis wise, if you break under the low, that's not a good thing. If you close under the 20-day simple moving average, you're probably testing the 50-day. Let's see what else we got. FVRR. So this was a stock that I took a position in because you could see it formed this pennant, broke out, and broke out with volume, which is something that I'm always looking for. You want moves. When you're breaking out, you want everyone to be like, all right, here we go. The stock's moving, because that's going to push up the price. Before a breakout, you always want volume as low as possible, because that means all the sellers from the last move up here are gone. There's going to be short-term traders in all of the trades you take. So if a stock moves up, it's going to pull back based on short-term traders taking profit. So this moved up 44%, pulled back to that 8-day exponential moving average, kind of stuck around there. And I drew this pennant here and bought on this day when it just peeped over And we had a volume uptick. Sold some, again, just because I thought the market was getting a little frothy. Had to pull back. So I sold a little bit, didn't sell enough because the next day we had that large red candle. Let me kind of pull this back here. Had this large red candle. My stop was at that 8-day exponential moving average. So I got out at about 117 on the trade. Haven't done the stats. Probably was a losing trade. Not by too much. So again, keeping your losses as small as possible. Always use a stop loss on your trades. And with a stop loss, a reasonable stop loss, and a reasonable position size on your trade, so you're not throwing 100% of your money on a single trade, you're going to be able to repeat trades and not blow out your account. So probably a small loss for me. Need to look back at that, but did get out kind of around this 8-day exponential moving average, probably a little bit lower because I like to set my stops below these moving averages in case algorithm trading, go and try and take those stops out that are just at that. So always put your stops a little bit lower than any support line, any simple moving average, anything like that. And after I got out, I was really glad during this lower wick, and then it came back up and I'm like, is this gonna pop? Was that the dip? But after I'm out of a trade, I always try and take a step back, relax for a second. Thankfully, the next day went lower, closed really close to the close. So I kept it on my radar, but this increase in selling volume, huge selling volume, still a lot of volume here. The volatility was too high for me to take this trade again, so I put it to the side. And then today you got a clean close under the 8-day exponential moving average, 20-day moving average, and set a lower low. That's not a setup that you buy into. So if you're still in the position, you keep a stop maybe at the low of the day, a little bit lower, but then you risk the stock moving towards the 50-day simple moving average. Again, this is trading versus investing. Trading, you have to always keep a stop. And at this point, if you've been hit by a lot of these growth stocks pulling back, it might be time and you haven't had stops. This is your first time hearing about stop losses. It might be time to kind of just get out of your trades, take a step back, understand, and get a game plan together, and then come back emotion free. So that's what I'm looking for. Break of the low. Then, I would get out if you're still in the stock, but then watch for the 50-day simple moving average to provide support once we start coiling up again. I never buy on a sharp dip because you never know how far it's going to dip. We'll get to a good example of that right after this. But yeah, never buy on a sharp dip. You always want to wait until a stock finds some support, builds a constructive base, and then starts breaking out. Let's see. Square. Yeah, so Square is actually kind of a good one for that. Square, we saw 3 big red days. I did not have any position on in this one, but you saw on Wednesday, it dropped down, tested that 8-day exponential moving average, popped back up. So I'm like, all right, maybe that was the dip. Found some support there. The rally's back on. But this is still a red candle outside of a Bollinger Band. I would have taken some profit at this point. The next day, opened up under that 8-day, closed between 8 and 20-day, but lower high, lower low, and look at the selling volume. That's a tick up in selling volume. Always another good sign to start cutting your trades. If it hasn't hit your stop already, just start getting profit on your side. And then today, another sell-off, but found some support at the 50-day simple moving average. It's not random. Other traders watch for these metrics and will buy for a bounce there. So if you bought here and you have a profit of, let's see, closed 8%, that's a great bounce. I guess just be careful and have your stops set and have a reasonable position size on. Because if you have those two things, you're not emotionally attached to any position. If it goes against you, you're out, you don't feel anything. Because this isn't you being right or wrong. This is you executing a trading strategy. Once I put my emotions to the side and once I stopped like boasting about wins, crying about losses, my trading got so much simpler. And that comes with good position sizing and stop losses on everything. So square, I'm looking for the low of the day and the 50-day simple moving average to hold support on Tuesday. If that does, it's still a little bit early to take a trade on a downtrend like this. I wouldn't start a position, but that's what I'm watching for if I'm still stuck in a position there. Microsoft was something that I traded, so that's a good one to go over. So you can see my stop, I highlighted it here. Let me pull it down so you can actually see what was going on. So this was a classic volatility contraction pattern. We had, let me go to the 6 month. We had this move up from the base and then some pullbacks on less magnitude. So you want that pullback to be less and less each time. So the first time, that's 9% from high to low. From high to low here, that's 6.5%. From high to low, it's barely anything, what, 2%? And you also want volume to be lightening up on each of these pullbacks because that means less and less sellers are getting out each of these times. So with that, once I saw those three, volume trickling down on each of the pullbacks, but going way up on each of the pops, that means there's a lot of buyers, little sellers. Once this breaks from the base, that's a breakout. So I drew my buy line like right at the top of all these. And you saw, now that I bring this down, change this to 3 month, bring it down again, sorry about that. So once it broke over this buy line, I bought on this day. And that's a great entry because that gives me about 8% to put my stop loss below the 8-day exponential moving average, so below what algos are looking for, and give the stock wiggle room to move around, but it gets me out once I know that this is a bad trade. It wasn't a bad trade, moved up, outside of the Bollinger Band, but green, so that could signal a breakout for continuation, so didn't sell anything there. Made lower highs and lower lows the next day, and selling volume was a little bit higher. So I took some profit here on this red day. Took a little bit more because, again, Mark Minervini started saying, hey, you guys, this market's bound for a pullback. So I started taking profit off. And then on Thursday, this broke through, went under let's see, what price did I get out at? 220.92, yeah, right around there. So it went under the 8-day exponential moving average. I tried to have my stop a little bit under there just in case it would find that support and bounce back up. It didn't. I got out at 220.92. Thankfully I did because Friday we saw lower high, lower low. And from my buy point to the low, that's another 7%. And that would be unacceptable for a short-term trader to hold through that. All right, I see all the ones that you're commenting. That's great. I'm gonna go through a couple other trades that I took and got out of, and then my watch list, and I'll roll back to the ones that you're commenting on to wrap up the video. So let me just find my list. Okay, so Adobe. And I'm gonna show my winners and losers. Again, always do that. If you're following someone who's not showing you their losers, they're not trying to teach you to improve. They're just trying to boast about their product, their stock, whatever they're trying to pump. I will always show my losers. This wasn't one of them. This was one of the better trades. So that VCP pattern, volatility contraction, you see that massive run up from the base, pull back, that's 11%, little pullback there, whatever. Pullback, finding some support at the 50-day simple moving average. So that was 11, that was 7. This little red day here, 2, found support, stayed above that 8-day exponential moving average. So then I draw that line from the tops and I buy when it broke over. So I got a good buy. I think I bought after the high of this little red candle. So bought here, and added a little bit more on this second day when it was in, it made an inside red day, which after a little bit of a breakout, if there's a pullback on low volume, that's usually a fine place to buy, I would say. I usually hold off on that because, but this was such a constructive setup that I thought it could really get going. So we saw 2 days of sideways movement. And this second day was on much lower volume. So I'm feeling pretty good about this. This next day popped up, higher volume, look at that volume. And then we get the gap up, gap and go. So took some profit, let me pull this down. Took some profit on I think I took profit after hours. It shows up as the next day, but took some profit after hours on this breakout. But we get this red candle outside of the Bollinger Band, took some more profit there. Moved sideways on lower volume, so that's fine for me. Bought more on the break over the high of this day, and it moved up with kind of equal volume, so feeling good about that. But then we started seeing signals that the market's pulling down. I sold, I think actually, yeah, sold a little bit more just at the peak on this day, kind of at the close. And then my stop, I tried to move my stops as high as I could on Thursday because of Wednesday's action. So I put this stop right under the low of the previous day, and I got stopped out for the rest at 520. Again, good thing I did, because from 520 to the low, that's 9%. Unacceptable. Unacceptable for you to have your stop that low for a shorter term trader. Broke under the 20-day, bounced back up, but we had high selling volume here, a little bit less on Friday, but this needs to update for after-hour trading. But overall, great trade. Took profits when it was there, took profits on those red candles over the Bollinger Band. This is what I'm trying to repeat over and over. So this is a good trade. Let's go to one of my bad trades. Let's see, what's a good one here? Ooh, CALX. So I think I shared this last week or so. I bought pre-market on this day, where if you kind of draw this. So this green is one day wrong because I bought pre-market, so it shows up weird. But I bought way overextended during pre-market hours, so got a bad entry, got bailed out on good move on Friday with high volume, so I'm thinking, great, this is gonna run from the low here, from the base to this point, it's up, that was 38%, so I'm thinking this has good volatility, this is gonna go my way. Did not. Because I got that poor entry, I had to keep a poor stop loss, and I got hit hard when it broke through the 8-day exponential moving average. Let's see, what, 1950. Oh man, yeah, that was brutal. So I tried to keep my stop under the low of this peak, or under this trough here. And still, it looks like that was the right move, but poor entry leads to a poor exit, leads to a poor trade. Dumb on my end all the way around here. Let's see. OSTK. So overstock was something that on StockTwits I got a request to cover. So I did trade this once when it was already getting back from being overextended. So one thing that I look for is how many bases has a stock made during its uptrend. Because once you make 4 or 5 bases, you got to be very, very careful with your position sizing and stops, because chances are the run is getting to be done. So let's push this to the side. You see one base here, jumps up, another base here, that's 2, 3, rallies again, oh no. Kind of like, there's 4. So I entered on the 5th base, and at that point, I knew this was gonna be a very short-term trade for me. Once I had profit, I would start locking it down, And the second the trade starts to move against me, I got to get out as quickly as possible. So I bought when the stock made a higher high over the previous day's high after it found some support at that 8-day exponential moving average. So it broke to the high end, got in right off that high. The next day, it opened higher, pulled back to the 8-day, found support there. So I'm thinking, great. It found support at that moving average. I had my stop under the lows here. We're still in a good trade. Next day went up 25%. I'm going to be profitable. Move my stops up to my entry to make sure I lock in a winning trade. Sold a part here because every time it goes through a multiple of my average stop or my average winning trade, I'm taking 10% profit off. The next day we had a peak over the Bollinger Band, and because this was already the 5th base breakout, I'm trying to take some profit. Let's see. Kept on taking profit as it was going up here, so all over the place on this day. But then my exit, I was looking for a break under this red candle. So let's see, what price did I actually get out at? 118.61, 118, even higher than that then. So I must have been looking at the peak candle. If it broke through that low again, get out. So I got out at 118, and thank God I did. I wanted to lock in that profit, because from 118 to where it is now, that's down 50%. And that's why something I always stress to people, do not buy during a sharp breakdown, because you don't know where it's going to end. We've been conditioned in this market to buy the pullback, buy the pullback, buy the pullback until it doesn't work. And when it doesn't work, it can be a 50% hit. And if you don't have correct position sizing on a trade, 50% hit could be a 50% hit to your account if you're 100% in that stock. So position sizing, always important. Stop loss is always important. If you didn't have a stop, you're probably in this being emotional and saying, no, this is gonna jump back. It always does. It pulls back and bounces up. It's always gonna pull back. Or it's always gonna bounce off the pullback. It hasn't. It's down 50% from the highs. If this is a stock that you've traded and it hurt you, get out of it. Put it in your trading journal, let it hurt you, learn from that. Don't make the same mistake, always have those stops set. We saw it pull down, and now once it broke under the 8-day, now that serves as resistance. And you saw that here, could not hold prices, closed right at that resistance point. Next day, opened above it, tried to test prices above, didn't work, got pulled down, closed under. You see the peaks always kind of peeping over that 8-day, couldn't hold, and now it's under the 20-day. So now that holds as resistance, down, down, lower lows, lower highs, huge selling volume. Great example of why stop losses are necessary if you're trading. Man, let's see here. Plug was another one that I got a comment on Twitter. I guess let me just plug my Twitter there. So I share a bunch of stocks on StockTwits and a bunch on Twitter, but the ones on Twitter are a little bit more filtered out for stocks that I'm really looking at buying versus selling, where on StockTwits, I'll go through my watch list and just throw out comments of what I'm seeing. So I might comment on 50, 60 stocks on StockTwits, but on Twitter, I'll post like 3 or 4 that I'm really serious about getting in. I'll even post what my entry prices that I'm looking for are. So give both of those a follow, and you can always use those to communicate with me. I'll respond as often as I can on those if you have any questions. So on Twitter, someone asked about Plug. Plug was a stock that I traded as well. So we got, again, always looking for winners to buy because winners typically keep winning. Losers typically keep losing. I'm looking for winning stocks that have pulled back, found support, and are now breaking out of that support. So even if you're counting bases, that's 1 base, here's 2, here's 3 long 1, 4 1, and yep, this is the 5th base. So this is already overextended. I'm trying to take a pretty quick trade on this. Let me pull this down so you can see. So I drew this diagonal. That's my buy line because I'm trying to get as aggressive of a buy so I can put my stop loss as low as possible with still being in my risk tolerance. So bought on the break over this point. I think I actually used the previous day's high for my buy order. Went up a ton, just started taking profits because, again, Mark Minervini signaled a warning, give him a follow, he's great. Signaled a warning, I started taking profits. Took profits on this red day. Actually, no, I got out. Let's see, what price did I get out at? 1303. Is that the low of the previous day? No, a little bit higher. Oh, that's the 8-day. So just below the 8-day exponential moving average. Because I was following good traders on Twitter and they were all saying the same thing, that's a signal to me that I should be very careful. This was also on the 5th base already. So after it broke through the 8-day exponential moving average, I was out, and good thing, because again, let's look, pullback, 19%, 19%. If I was in the stock with bad position sizing, 19% of my account gone, 2 days. Have to keep stops, have to keep position sizes correct. Let's jump to just really quickly some watch list stocks. I can't believe I'm running on an hour. I need to figure out how to time this better, but hopefully you guys are enjoying this. Oh, really quick, TTD was another trade that I took. Was a winner, jumped up here, made that pullback. I got in on the break of this diagonal here, sold a little bit when it broke over the Bollinger Band, but then got stopped out at my stop under these two lows at 1470, pulled all the way down. That's another 12% drop that if I didn't have my stop, I would have lost. And look at this double block of selling volume. Some of this is in the buy up here, but a lot of selling. And it's below all the short-term moving averages. So if you're in this, set your stop loss for Tuesday and get out when you can. All right, so what I'm in currently is DAR, Darling Ingredients. So let's see. Oh, let me add, I thought I had that here, relative. So what I'm looking at in these pullbacks now is what is showing relative strength that is also a winning stock. Because you could say, oh, Ford is showing relative strength today. It's only down a little bit, but Ford wasn't a stock that was overinflated. Ford wasn't a stock that was already doing super well. So of course it's not gonna pull back as much. So I'm looking for winning stocks that are pulling back very little over the past 2 days or are green on days like today. So this was up from its base by 40%. So winning stock. And look at Wednesday, Thursday, and today, it was great. So if we're at the 3 month. Okay. So I drew this diagonal resistance point, buying if it goes over that. Nick, you might point out, Nick, there's a huge selling volume. Why are you doing that? But look at this lower wick. That means sellers came in and buyers came back. I'm not sure exactly what size of the trade that was. I can zoom into that day and look, but still had this on my radar and because it was holding up so well. So if you look down here, this shows the price relativity to the S&P 500. You can see it's doing well, and spiking up. So when the market does come back, this is gonna push even higher forward. So bought today, and it looks like it's gonna be going up. Now, if you missed out on the buy today, and this holds on Tuesday, you're still only 4% extended from the 8-day and 20-day moving averages. So it's not too overextended. What you could wait for is a possible pullback to that area and add there. But this is a stock that so far it's looking good. I did buy on a smaller amount of entry, a smaller entry position than usual, just because the market's so volatile and I don't want to take too much risk. The other one is Stitch Fix. Why does it not show my... Anyway, big winner from the base. This is up 183% from the lows of the year. Pulled back, I think it's around 38%. What was it? 30%. 30% pullback, and then we get these minor pullbacks. on like volume shrinking, you got this breakout day on good volume. So now this jumps to my watch list because I probably should have bought it at this point, but thankfully I waited. Well, it wasn't on my watch list at that point, but it did pull back, and then I drew the little line at the highs there, diagonal line, low volume pullback, showing better relative strength during that point. That's important. And then I bought when it broke over that line. Again, bought with a small position because the volatility in the market is, it's scary right now. So I'm not putting too much capital work because not all the trends are in my favor. I want to put as much probability on my side as possible. Two other stocks that I'm looking at are SHAK. So this is starting to work better. A lot of the restaurants have been doing poorly, obviously, with the disease, but this is up 113% from their lows. So that's, again, something I look for. It already had this really good volatility contraction pattern as volume was shrinking a little bit. Had the sell-off day. I was actually trying to short after this point, bought it back quickly when it came over the 8-day exponential moving average. That's fine. But once it broke over the 200-day simple moving average, that brings a different type of trader into the trade as well. So now longer term traders are saying, hey, this is over something that I usually look at, time to start putting money in. So you saw the day that it broke over the 200-day simple moving average, look at this volume. That's huge. That's not retail people buying this stock. That's companies. So broke out. Actually, it was the day. Yeah. It tested over the 200-day, pulled back a little bit. But lots of buying there. Continued buying. And now we're pushing up on that upper Bollinger Band as it goes up, 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 up. And because I didn't buy at this point, I missed out. I missed that opportunity. Does it hurt? Not really. There's always going to be good opportunities in the market. So up 20% from that breakout point, but I'm waiting. I'm being careful, and I'm watching for a low volume, shrinking volume here, pullback to that 8-day exponential moving average today, Friday. The low of the day found support right at that point, bounced up a little bit. So what am I looking for with this? If it breaks over these highs, I'll get in with the starting position, maybe a little bit less than my typical starting position because the volatility of the market, but breaks over that. This has great relative strength. Some of that's because it's not a tech stock that was overvalued, but good relative strength's going higher. So that's a stock that I'm looking for. And the last one I wanted to share, Tupperware. Not something that I would think of, not something that was on my watch list. It should have been because it jumped 474% from the lows. So now we zoom in, we get on a 474% move, you're gonna have some profit taking, obviously. But you have that volatility contraction pattern that moved down to the 8-day exponential moving average, 20% drop from the highs, 14%, so you're decreasing that magnitude on the pullbacks while, wish I could get that large volume candle, but volume's shrinking on the pullback, less and less sellers. So that means once a big buyer comes in, if there's not enough sellers to provide that liquidity, the stock price has to go up quicker. And that's exactly what happened here. Moved up. Again, I wasn't in this, but look at how quick this moved up. And look at the volume. So it moved up 53%. It's already over the Bollinger Band, but this is a good stock to show because you get a close over the Bollinger Band near the high of the day. That's a bullish indicator. That's not a bearish indicator. That doesn't mean you add at that point. At that point, you've missed the trade. You got to sit out, watch it. But if you're already in it, you're not taking profits here because the next day, another close, higher high, higher low, found support at that 8-day, close above the Bollinger Band, more buying, another close above, another close above, another close above. So what am I looking for here? I'm looking for a pullback to that 8-day exponential moving average on decreased volume. Once we get that, once we get another base set up, maybe I take the trade on a breakout. But if this keeps going up, I just missed the trade. It's fine. I miss trades all the time. You can't trade every right trade. But if we pull back to this 8-day exponential moving average on low volume and then start to break to the upside, then we could see an ad there. So those are my watch lists. Let me go over to the comments section and read what we got here. Oh yeah, so NVAX. NVAX. This is something that I have been shorting a lot into the downtrend here because I was in a lot of good tech setups that I was long on, so I wanted to offset my overall portfolio risk by setting up some shorts. And this was one that had pulled down, so now the trend is down. That trend is in my favor if I'm going to be shorting. Always put the trend in your favor. But what was I looking for? I'm not shorting at this point because that move's already in. I missed that move. Oh well. I'm looking for a rally back up to now a converging 8-day and 20-day simple moving average to find some resistance. It did pop over there for a second, but it did find that resistance point. And I shorted on this day after hours when I noticed it for the third day in a row. Couldn't hold prices over that 8-day exponential moving average and set a new low compared to these two lows. So my initial short was right there. Started taking profits when it touched that 50-day simple moving average where it closed there. Took more profits when it was a green candle close underneath the lower Bollinger Band. That's exactly the flip of the upper Bollinger Band with a red candle to take some profit. So again, if I'm shorting, see a green candle close, that means buyers came in, the stock closed higher than the open, and with that longer tail, that shows a lot more buyers than sellers at this point. So started closing positions out there, closed out the next day when it went over that 50-day moving average. So at that point, the first trade, the main chunk of this trade is done. I did try another short when the stock broke under the lows right here. Did not work for me, went back up. So that was a much smaller position, but got out when it touched that 8-day exponential moving average. Kept shorting, put on a new short, took profit the next day of half my position, and took the other half, got stopped out when it went over, it opened up over the 8-day exponential moving average, and now I'm just sitting. Because I only have 2 long positions set up, I'm not going to be unnecessarily shorting any positions. Why is this not working? So this is another great example of why you use stops, because this stock ran from $5 to $180, so 2,100%. Profit's been made on this. It needed to pull back. It's pulled back 53% from the highs. This is a great example of why you always use stops, always have diligent position sizes. All right, Workhorse. Yeah, Workhorse is, I'm not going to be trading Workhorse because I've already been wrong on it twice, and now I already have some mental bias to the trade. So it's better to be honest with yourself and say, are you revenge trading? Are you trying to trade and win your money back from a stock who doesn't know who you are, doesn't know your entries, and doesn't care about you at all? You shouldn't put emotions on the line. Don't mix emotion and money together. So when this, when I got stopped out the second time, I just scratched this. It's on my watch list because I see the potential here, but I'm not gonna be able to trade this without emotion. So I won't be looking for it, but I did buy on the attempted breakout here, got stopped out under the 8-day exponential moving average and the 20-day simple moving average here, bought the breakout, but was dumb and added to that position. We covered that last week, pulled back, and I lost twice the amount of money because I didn't wait for a pullback to add. So I lost twice the amount of money on that. It's been my biggest loser since June. I obviously have some aggression against this stock, so I'm not going to be trading this in the future. And of course, threw salt in the wound with a breakout with good volume, lower volume pullback, and now a push higher on Friday with good volume. If I'm in the stock, I'm holding it because it closed at the high of the day. It closed right at that upper Bollinger Band with an increase in volume, with good price relativity. So this is green light all the way if you're already in. If you're not, it's probably too far extended from the 8-day. Let's see. Yeah, 9.5% from the 8-day. Wait for a pullback in here for it to find some support and move on. If it doesn't, just find a different stock. But if you're in this looks great. Congrats. Very jealous of you guys. But yeah, I'm not trying to mix my emotion with trading. I'm trying to make money, not stories. So let's see, what else did I cover? Man, lots of these. So for the ones I don't get to today, I'll put on StockTwits. If you're not on StockTwits, please DM me on Twitter and I'll provide an analysis on there just for you. I don't want to be throwing too many charts out there for everyone, but I do want to get to the loyal fans that you guys are early on in this stream, and I do appreciate all the comments. So I'll put them on StockTwits later on in the week, or if you DM me and say, Nick, what are your thoughts on this? I'll get to those. But let me just do 2 more here. We'll wrap this up at an hour 15. Let's see. Let's do one that I've been watching and one that's completely random, so you see my first take on a stock. So Target is one that I've been watching. I had this drawn earlier, but great diagonal down here. This had a classic volatility contraction pattern, pullback on low volume, less and less all the way up here. So if you drew the line, and I completely missed this trade, again, that happens, but you buy on this green candle. And so we talked about this, I think last stream too, but I never hold into earnings. This is the wrong earnings date. This was the earnings date. I'm not sure why E-Trade has that, but I never hold into earnings unless I have a 10% buffer on a stock, because earnings are always a flip of the coin. Maybe they're all priced in already. Maybe it's going to beat expectations, go up, but I'm not trading when I don't have an edge. So if I already have a 10% buffer, I can push that trade a little bit more, because if it pulls back 15%, that's only a 5% loss. And Target would have been great for that, because it jumped, let's see, closed 9, actually no, from the breakout point, closed 11%. So I probably would have taken half of the position off at this point. Again, I missed this trade, so this isn't what happened. But would have probably taken a little bit off. But again, gaps up, and now we're in a pullback. So what am I looking for? I'm looking for it to pull back on lower volume and then break out on higher volume. And so far we've gotten that low pullback, and I'm looking to buy on each of these days if we get a break and close over that resistance. If it breaks over and pulls back, maybe cut your position size down in half and then add it back once you get a close over that resistance point. But we haven't gotten that. We got the low volume pullback, but then the market kind of started tanking. So drop down below that 8-day exponential moving average. So now I'm kind of done with this for now. Still on my watch list, but I'm not putting in the trade in the morning to buy on the breakout. But went under the 20-day simple moving average, rallied up, so there's a little support there. But yeah, what I'm looking for, if I'm already in the trade, I'm putting my stop under the low here with a little bit of a buffer to try to get out if, so I don't get knocked out immediately if an algorithm is looking for the low, but get out shortly thereafter. Otherwise, it's going to move down to fill this gap. On the buying side, if you're not in already, if it breaks over this resistance diagonal and closes over that, especially if it does so with good volume, that's a good buy signal. And then what's a random one I haven't seen before? Let's do net. All right, let's zoom out, see the complete story. So it's an IPO, has been going up and is now seeing some resistance. Pulled back. Once it broke under the 50-day simple moving average, I would be out of the trade, especially because off this consolidation point, it's down 19%. Always have to put a stop loss there. Let this consolidate. Let more sellers out before taking a trade. If you're still in this, put your stop under the low of the day and then get out and go from there. So let's see. All right, let's wrap this up. Hour 15. These go by fast. If you have any stocks you want me to look at, DM me on Twitter, reach out to me on StockTwits. I'll be there. I try to answer everyone that I can on that. But with that being said, it is a long weekend, so take it away from the screen. After you leave a like or comment, leave the screen for Friday, Saturday, Sunday. Come back on Monday. Come back and start writing down a game plan before the stocks move around, and while you can do that without any emotions attached to the dollars you're either making or losing. Outside of that, I am just starting this channel up again, and it really, really helps with the YouTube algorithms. If you leave a like, if you enjoyed the content here, comment below any stocks, or comment below basically any comment. Did you like the stream? Did you not? Are there any improvements that I could be making? Anything like that, any comments, any interactions really help the YouTube algorithms push this to more traders. So that's great. Outside of that, follow me on StockTwits, Twitter, and have a great weekend.